Hey everyone, welcome back to InvestoSphere, your go-to place for all things finance and investing. Today we're diving into a hot topic that affects millions of Americans every single day: mortgage rates. You've probably heard the buzz. Rates are on the rise, and that's got a lot of people worried about their home buying, refinancing, and investment strategies. But what does all of this really mean for you? How are mortgage rates today shaping the housing market and your wallet? And most importantly, how can you take advantage of these shifts to make smarter financial decisions? In this video, we're going to break down everything you need to know about mortgage rates, from how they're determined to how they impact your financial future. And stick around, because after each section, I'll be asking you a question to get your thoughts, and I want to hear from you in the comments below. So grab a seat, take some notes, and let's dive into mortgage rates today. 1. Understanding mortgage rates. Let's start with the basics. What are mortgage rates and why do they matter? Mortgage rates are simply the interest rates you pay on the money you borrow when you buy a home or refinance. These rates can either make or break your home purchase, affecting your monthly payment and the overall cost of the loan. Now, these rates can fluctuate over time due to various factors, including the Federal Reserve and its monetary policies, inflation and economic conditions, lender competition, and your creditworthiness. But what's really interesting is the impact mortgage rates have on the housing market. When rates go up, it often leads to higher monthly payments for homeowners, fewer people being able to afford homes, a slowing down of home sales, and refinancing opportunities. Understanding these dynamics is crucial for anyone looking to buy a home or refinance. Do you think mortgage rates will keep rising in the near future, or will they stabilize soon? Share your thoughts in the comments. 2. How mortgage rates are determined. Now, let's talk about how mortgage rates are set and who has the most influence. The truth is, mortgage rates aren't just random. They are heavily influenced by the U.S. economy, the Federal Reserve, and even global financial markets. Let's break it down. Federal Reserve's role. When the Fed raises or lowers its rates, it directly impacts how much banks and lenders charge on mortgages. The Fed's goal is usually to control inflation and maintain economic stability. Economic indicators. When the economy is booming, mortgage rates tend to rise. When the economy is sluggish, rates can drop to encourage borrowing and spending. Global events. Yes, international markets and crises, like a pandemic or trade wars, can affect U.S. mortgage rates too. Credit risk and your personal factors. Lenders also look at your credit score, down payment, and other factors to decide your individual rate. The better your financial profile, the better your rate. Mortgage rates are impacted by macro and microeconomic factors, making them hard to predict accurately. So it's always wise to stay informed and keep an eye on trends. What do you think is the most significant factor affecting mortgage rates right now? The economy, the Federal Reserve, or something else? Let me know in the comments below. 3. Impact of today's mortgage rates on homebuyers and investors. Okay, now let's get into the real-world impact of today's mortgage rates on homebuyers and investors. For homebuyers, higher mortgage rates mean higher monthly payments. If you're looking to buy, you might find that you can afford a smaller home or need to increase your down payment to make up for the higher costs. For real estate investors, mortgage rates can make or break your investment strategy. Higher rates can lead to lower property values as demand decreases, higher financing costs, reducing your potential ROI, a slowdown in buying and selling. However, there's also an opportunity here. With the right strategy, some investors may be able to capitalize on lower home prices due to decreased demand. Are today's mortgage rates making you reconsider buying a home? Or are you planning to push through despite the higher rates? Let me know how you're approaching this in the comments. 4. Strategies to save money with higher mortgage rates. Now that we've talked about the challenges of high mortgage rates, let's focus on how you can save money despite these rising rates. Here are a few strategies. Refinance early. If you're locked into a lower rate, consider refinancing before rates rise even further. Consider adjustable rate mortgages. While these come with some risk, they can offer lower initial rates if you plan to stay in your home for a short time. Paying extra toward principal. Even a small extra payment toward the principal can reduce the total interest you pay over the life of the loan. Shop around for lenders. Mortgage rates can vary from lender to lender, so it's always worth getting multiple quotes. By making the right moves, you can ensure you're getting the best deal even in tough economic conditions. Have you considered refinancing or other strategies to save money on your mortgage? What's your plan in today's market? Let me know in the comments. 5. The future of mortgage rates and housing market. Looking ahead, what's next for mortgage rates and the housing market? The future of mortgage rates is tied closely to the economy. If inflation continues, we might see rates stay high. But if inflation is controlled and economic conditions stabilize, rates could level off or even drop. It's a wait-and-see game, but strategic investors and homebuyers can still make informed choices by understanding the trends. In the housing market, we might see continued inventory shortages and price fluctuations, but the future largely depends on mortgage rates and the Fed's actions. Do you think the housing market will bounce back, or are we in for more rate hikes in the coming months? What are your predictions? Share your thoughts in the comments. Let's quickly recap what we've covered today. How mortgage rates work and why they matter. What factors influence rates and how they're determined. The impact of today's rates on homebuyers and investors. Strategies to save money in a high-rate environment. What the future holds for mortgage rates and the housing market. Mortgage rates are a key factor in financial planning, whether you're buying a home or managing an investment portfolio. Staying informed is the best way to navigate today's shifting market. Thanks for watching today's video. I hope this deep dive into mortgage rates helped clarify how today's rates affect you. Don't forget to like, comment, and subscribe for more finance tips and market insights. I'd love to hear your thoughts in the comments below. Stay smart with your investments, and as always, I'll see you in the next one.